All right, everybody, and welcome and happy Thursday to you. We'll get started in about 4 minutes and 30 seconds. For those of you that are watching a recording or anything like that, if there's a little bar at the bottom that you can fast forward, you can move quickly through the introduction here or the preview or the before we start period of the webinar presentation. Happy that you're here. My name is Rob Booker. I'll be your host today. I am the host of the Millionaire Challenge podcast for Tim Sykes, and it's a pleasure to be with you today. We're going to cover a variety of topics today, including, well, more or less a complete trading strategy. But I want to focus on one question in particular today. And in order to focus on that question, you're going to need to have your charts ready to go. And in particular, we're going to work from the 5-minute charts and the 1-minute charts. And we're going to look at WORX. It's a stock that was running this morning, and it halted a couple of different times. And when a stock halts, it presents a particular set of challenges for traders. And if you've ever been in a trade, when a stock halts, it can be a difficult experience, and it can actually be kind of scary if you've never had it happen before. And many of you, to whom this has happened, you've probably wondered, should you stay in a trade when the stock halts? Is it a good thing or a bad thing? How long does it take for a halt to be completed? What happens after the halt? What's likely to happen after a stock halts? Does it mean that something went wrong? Does it mean the company is no longer going to be around? Does a halt lead to a trading suspension? And so much more. So we're going to cover that topic today. I'm glad that you're here, and welcome to the presentation. We're going to look at the 5-minute and the 1-minute charts, and we're going to focus on WORX today. And it's good to be here with you. It's Thursday, June 15th. My name is Rob Booker, and I'm glad that you're here. Welcome to the presentation. If you are here and you're seeing that countdown on the screen, we're just about to get started. And you might also notice the Tim Sykes Millionaire Challenge podcast logo in the upper right corner of the screen. I am the host of that podcast, and that's a podcast in particular that I created for members of the Tim Sykes Challenge, but all are welcome. You can listen to that on Spotify or Apple Podcasts. And it's a great way to sort of get introduced to the challenge, but also I talk about trading strategies and the lessons, tips, tricks, habits, and routines of millionaire traders inside of the challenge. So I'm glad that you're here, and welcome. Happy Thursday. Hope you're having a great week so far. I will be your host for the entirety of this session, and we'll spend about 45 minutes together here. And we're going to cover a lot of ground as quickly as we can. I'll try to take some questions as we go. And if you don't get your question answered, I apologize in advance. But I do see you here. I can see a ton of names here: Neil and John and Eric and Ronald and Abby and Ivy and Ben, Trevor, Scott, Jessica, Jane, Ray, and so many more. So it's great to be with you. I'm not going to sit here and list every single name that I see. However, it's good to be with you. I'm grateful that you're here, and thank you for spending some time together with me on a Thursday. If you're here because you want to level up your trading and you want to do a little bit better at all of the things that you need to do in order to succeed as a trader, then you're in the right place. I'm going to try to cover some things that we've never talked about before and mix it up a little bit. Every single time we do this webinar, we cover a topic that is of interest to people who struggle with their trading, whether it's on the psychological or the mindset side of trading, or the risk management side of trading, or just the implementation of a strategy. And that's exactly what we're going to do today. Today, we're going to focus on the implementation of a strategy. We're going to talk about buying stocks, but we're going to talk about what happens when you buy a stock, or for that matter, if you sell a stock, and the stock halts. And trading stops, and the chart freezes, and the quotes freeze, and everything blanks out, and you can't enter a trade, exit a trade, and you're kind of stuck in that trade. It can be a scary experience the first time it happens. For that matter, it can be a scary experience the next time that it happens. But it's actually a really interesting occurrence. It does not happen that often to most traders. However, it does seem to happen more to the traders that I trade together with every morning. In fact, we look forward to stocks halting. And if that sounds strange, all will make sense very soon. So welcome. I'm glad that you're here. I stopped the timer on the screen just so we don't get a giant buzzing sound on the screen. And we're going to keep this thing moving. We got about 40 minutes here together, maybe 45 minutes. And I'm going to I'll get to the entire structure of the presentation in just a few minutes, and I'll share with you what we're doing and why we're doing it. I'm glad that you're here. You can ask questions at any time. If you see a chat box on the screen, you can ask a question inside the chat. I'll try to get to it. Sometimes I don't get to every single question, and I apologize for that. And if you want to follow up later, I'm going to post a link or put a button somewhere on the page, and it will say something along the lines of book your call or book a call. And that's a chance for us to talk about your trading future and to create a trading plan together that is personalized for you. So welcome. Here's the trading lesson of the day. What should you do when a stock halts? A halt is when a stock stops trading in the middle of the session, and all trading stops, the quotes stop, the level 2 quotes go blank, the bid and the ask kind of gets just sort of all messed up and either disappears completely off your trading platform, and you can't enter a trade or exit a trade on that stock. And the question is, what should you do when that happens? And the reason I want to talk about this today is it's more likely that this will happen when you are trading together with me inside the Tim Sykes Challenge. And so we need to approach this question for those of you gearing up for and getting ready to trade together with me in the challenge. You're going to need to know what to do when this happens. And also because I'm here to build some trust with you and encourage you to trade together with me and Tim Sykes in the challenge. I want to teach you what we do and how we do it. And I sort of want to lay it all out there and let you know what we're doing. So this is Works from this morning. Works is, I really honestly don't even know what this company does, and it's not important for the purposes of looking at this. But we do have a trading strategy that focuses on buying stocks on a breakout. And I've talked about that strategy before on these webinars. And we tend to trade stocks that have a low float, meaning a low total number of available shares for trading, and a high volume or lots of shares trading for the day. These stocks, if they really get going and they start to break out, they halt. And where you see the arrow pointing to a candle on the screen, that's a bullish candle or a candle that was rising. It's green. So green candles are going up. On that candle, all trading stopped. The quotes disappeared. The chart stopped. The price stopped moving. The bid and the ask disappeared off of the charting platform. And if you have an open trade on this stock, your profit and loss will either go way up or way down all of the sudden, and it won't be an accurate reflection of what your profit and loss will be when the stock reopens. So someone's asking already, is it a good thing or a bad thing when a stock halts? Well, we're going to cover that today. That's going to probably be the underlying topic that we are going to solve. Now, I keep a scanning tool open at all times during my trading day. And not only does it tell me the stocks that are most likely to jump, but it also tells me when a stock just halted. And that's exactly what happened on Works today. And I was in the middle of a webinar together with my trading team. For those of you unfamiliar with me that we've never met before, it's a pleasure to be with you. My name is Rob Booker. And we're looking at Works from this morning on Thursday, June 15th. And we were trading together in our morning webinar, and we were looking at Works, and we were drawing our levels and planning our trades, and all of a sudden, all trading ceased, and the quotes dropped off, and the halt started. So we're going to talk about what we did in that situation. It actually it happens to us 2 or 3 times a week. So should you buy a stock when it halts? Should you get out of a trade if you're in it? Well, we're going to talk about that. We're going to cover that today. So welcome. And I'm happy that you're here. My name is Rob, and I will be your host. So I'll do my best to get to your questions as we go. If I miss your question, I apologize. The best way to follow up on your questions is to click the link in the chat or the button on the screen that shows you book your call. And that's a way for us to have a conversation about your trading future together for free and to plan out your future and talk about the Tim Sykes Challenge and see if we might be a fit for working together. So I started trading in the year 2000. I lost my first account. I was so excited. I was following a trader that was writing online. There were no blogs at the time, but he was writing online, and he was saying that he worked inside of a bank and that he got news of mergers and acquisitions, and so he knew which currencies were going to move. And it was completely legal. There was nothing illegal about it. It sounds like inside information, but that doesn't really exist in the currency markets. And so he would say, oh, there's going to be a merger and acquisition with an Australian company, and the Australian dollar is going to rise. And this guy was right 20 out of 20 times. And I was paper trading, and I was completely basing my strategy on just following this person. And of course, I funded my account, And I got very excited, and I took a really big first trade, and I was already counting the money that I was going to make immediately when taking that trade. And of course, you know the rest of the story. I lost my first account. I went from a $2,500 account up to $2,750. Didn't take my profit on that trade, and then ran the entire account down to $250. And I was devastated. I was absolutely devastated. And I don't know if you've ever felt that before or made a really big mistake in your trading, but that's common. Every single millionaire in the Tim Sykes Challenge, from Jack Kellogg to Tim Grittani to Tim Sykes himself, they've all had really big losses from time to time. We've all done it. And then I met my mentor. Through a friend of a friend, I met a hedge fund manager who lived in Switzerland. And I got him on the phone and we talked, and he offered to mentor me if I paid him. And he'd never done that before. However, he'd been trading for 35 or 40 years, had a ton of experience. He'd worked on Wall Street. And he said, sure, I'll work together with you. I want to be paid for my time. And he gave me a guarantee. He said, if I can't help you trade successfully in 6 months, I'll work together with you until you can. And then he said, and if I can't help you trade successfully in a year, I'll just give you back the money, but I don't work for free. And he only did this for me because he was a friend of one of my friends, but he taught me how to trade. And we worked together by email because at that time there were no webinars or anything even like that. And it worked. I had a ton of success from working together with him. It did take me 11 months actually to become consistently successful. And I felt like that clock was ticking. I don't know if you've ever felt like that before, but I did feel like my back was against the wall. I had my law school loans to pay off. I had gone to law school and spent $100,000 going to law school. And so it didn't seem like a really giant problem to pay an experienced hedge fund manager worth tens of millions of dollars to pay him, because I'd already kind of wasted $100,000 on law school, and I didn't really get a return on that, and I didn't want to be a lawyer. Anyway, I went on to trade. I've had a really fun career as a trader, ups and downs, of course, as everybody else. In 2006, 2007, I was featured in the book Millionaire Traders, written by Kathy Lean and Boris Schlossberg. Went on to write my own books and do a podcast. I managed money as a commodities trading advisor for a few years. And now all I do is I trade my own account, and I do webinars together with Tim Sykes or on my own for the Tim Sykes family of traders inside the challenge. And for those of you that have never heard that term before, the Tim Sykes Challenge is the Tim Sykes program where he teaches traders to be more successful. And it's a combination of lessons and live trading webinars where you can get all the help that you need in order to improve your trading. So I've been a trader for almost 23 years. I met Tim Sykes in 2007 at a Traders Expo. I kind of introduced myself to him, interviewed him for my podcast, which became a radio show and a YouTube channel. I sold all of that a few years ago. And now all I do, like I said, is I trade. And I joined forces together with Tim Sykes recently with a really big goal. And we're going to try to double the number of millionaires that come out of the Tim Sykes Challenge. So that's who I am. And just in the last month or two is when I was invited to help out inside the challenge. All right. So I'm going to update this list of stocks. So we're going to kick things off here. And I want you to make sure that you're focusing on AI, CXAI. You can take a look at Carvana and Apron. You can also look at SOUN, because artificial intelligence is just the most important sector in the stock market right now. It's just crazy popular right now. And I want you to also focus on the NASDAQ, that's the Qs, and NVIDIA, which NVIDIA is on pace to maybe end up becoming it is already one of the most valuable companies in the world. It's got a market cap now of over $1 trillion, or at least it did yesterday. So I want to build some trust with you. So I want to kick things off by giving you that list of stocks. I'm just going to give you that list of stocks. So write those down. I'm going to give you a moment to write those down. Artificial intelligence is the craziest and most important sector in the stock market right now. Over the course of the month of June, I do expect AI to possibly attempt to and try to reach $100 a share. I could say the same for CXAI. SOUN is probably going to have a big move. The NASDAQ's probably going to have a big move. NVIDIA is probably going to keep moving as well. So I want to give you those names because you should be watching those names. And I'm even going to show you how we set trades up on those names so you can be prepared to trade them as successfully as possible. Now, when I do webinars like this, these are what I would refer to as informational sessions about the Tim Sykes Challenge. And traders sometimes will tell me during this webinar, listen, I don't have a lot of money to trade with, and that's a big obstacle. In fact, you can do a lot of things with $1,000 trading account. You don't need a special broker or special permissions. And some people say, well, I really can't afford a mentor. Well, the great news is this webinar is free. And if you can't afford a mentor yet and you haven't saved up enough money, then stay tuned here because I'm going to cover a trading strategy and a lot of other stuff. And hopefully we'll have a chance to work together in the future. For those of you that are ready to get more personalized help and you do want to work together with Tim Sykes and I, then click the link that you see in the chat. It should say book your call or something like that. And in about 60 seconds, you can set up a time for us to speak and we can discuss working together more closely. For some of you, trading started off as this really simple and exciting endeavor, and it got real complicated real fast. And I want to help simplify everything to do with trading. I want you to know there is a path, and I'm going to do my best to show you that path. So do you want to know how the successful traders inside the challenge are doing it, how they're having some success? Well, I'm going to teach you a simple method. We're going to focus on looking at the strongest stocks. And we trade those stocks every day with the team, and I'm going to help you get some feedback on the trades that you take. So I'm going to turn my screen sharing off for just a moment, and then I'm going to open up a chart on WORX, and we're going to look at the move that WORX made this morning. And here we go. I'm very excited this. Now we're going to do some chart work here. So for those of you that are like, when are we going to get to the chart work? We're doing it right now. For those of you that want to look at entries and exits and plans on NVIDIA and AI and CXAI and SOUN, that's coming up near the end of the presentation. Could I get at least a small commitment from everybody here? You can say it in the back of your mind, or you can type it into the chat if you want. Will you stay all the way until the end? And we'll cover entries and exits and plans for some of those other stocks also. All right, let's talk about Halt. Halts can be a scary thing. A stock halt is when the exchange, in particular the NASDAQ or the New York Stock Exchange, stop all trading in a financial instrument because there's just so much activity, they cannot fill all the orders, and they have to stop trading to sort out the order book. So WORX made a high of the day in the pre-market session this morning at 35.36 cents. It was a buy trade on a breakout from beyond that level. And traders in our family of traders most definitely bought that on the breakout, and it jumped. We had profit targets in place already. We cover this in a variety of places. I've talked about this a lot in the past. And we had some profit targets in place, and it reached the first, the second, the third, and the fourth profit target. Okay, emergency meeting right now. SOUN is trying to break out. So we're going to skip to that just for a moment. I forgot I was going to mention this. SOUN, I just want you to see this. This is, I'm just going to show you a chart from today. This is what you want to look for in AI, CXAI, or SOUN. Watch for these stocks to break out higher on a lot of volume. Okay, we're going to come back to that, but that's exactly what Works did this morning. If you're wondering what happened, we get a little alert like that. It tells us that a stock is breaking out and it starts to jump. And so we buy it on the breakout. It went to the first, second, third, fourth, even the fifth profit target, and it created a high of the day at 54 cents. We set up a brand new buy trade above that level, and sure enough, it broke out. Now, when it broke out, it stopped trading right here. You can see there's a gap in between the top of this candle and the bottom of the next one. They halted trading. They stopped trading. So why does a halt occur? A halt happens because they cannot process all of the orders quickly enough, and they have to stop trading and sort out the order book. If you are in a buy trade and a stock halts and stops trading going up, that is the greatest news you could get. It's good news. A halt for you, if you are buying a stock and it halts upward, is great news. Why is that? Because there's been so much trading activity on the buy side of the equation that they cannot process the orders, and it has created sort of an upward panic. You can also refer to it as melting up. That's That's a phrase that a lot of traders will use. If you are in a buy trade and it halts up and stops, you want to look to put your profit target slightly higher than where it is trading when it halted, and use a limit order to do it. A limit order will be filled when the market opens back up. Now, a halt will generally last for about 5 minutes to 7 minutes at the most. They can last longer than that, but generally speaking, they will only last 5 to 7 minutes. When it opened back up, it jumped higher. It's not a surprise. A stock halt was originally invented to prevent stocks from getting out of control. Well, that's exactly the reverse is exactly what happened. Now, when a stock halts, traders will just jump online and they will tell each other about it. They will tell their friends about it. They'll text their friends. They'll get on Twitter and they'll tell the whole world about it. And all of a sudden, it attracts even more attention to the stock itself. And then it usually will jump higher at least one more time. Because it will jump at least one more time, a halt's a really good thing as long as you use it effectively. Sometimes a stock will halt 7 or 8 or 9 times. One time this year, Jasper, JSPR, halted 20 plus times in one day, and it was just a rocket ship. CXAI halted more than 10 times and went from $3 a share to $70 a share. Works only halted once or twice today, and that was it. It jumped up. It reached some profit targets, but we want to get out of the trade as soon as it's got its first halt. Just because some stocks will halt and then rise 100, 200, 300% doesn't mean we're going to try to get 200% on the trade. We're just going to take it as a gift that when it reopens, it should open back up higher than where it was and give us a chance to exit the trade at a profit. So that's what happens on a halt. It's kind of it's not kind of, it is very exciting stuff. It's important to know that a halt isn't a bad thing if you're in a buy trade and it halts upward. The reason we get out after the first halt is because it can turn around and halt down. And if it turns around and halts in the opposite direction, you can get stuck in a really bad situation where a stock falls and halts and continues lower. Now, Works did not halt down, not at least in any really significant or terrible way. It did eventually drop for the rest of the day, which is exactly what stocks will do like this. These low float, high volume companies are not profitable companies. So they will eventually fall. Now, how do you find out about a halt? The best thing that you can do is focus on low float, high volume stocks. That's the best thing that you can do. If you focus on those, you will eventually find yourself trading a stock that gets halted. The other way to find stocks that halt is to use the Stocks to Trade Halt Scan. If you haven't ever used that before and you have access to Stocks to Trade, you can do a search inside of your tutorials and the help area, and you can find out how to scan for those. It's not helpful, though, because once a stock has halted, the cat's out of the bag, so to speak, and you don't have a chance to trade that any further, or not at least in any truly significant way. So by the time it halted, the move is generally speaking over. And what I start doing, if, for example, my friend Eric is here in the webinar, he says, how can I scan for them? If I did scan for stock halts on the buy side, what I would do is I would use that scan to start searching for and waiting for a chance to short the stock, because that first halt, second halt, third halt, that's going to be the end of the move at some point in time. The whole entire reason they're halting the stock is to stop it from going up, and it will work eventually. Eventually, they'll get a handle on things, and it will stop. So my entire focus in my trading career is to trade a simple method on the strongest stocks and do that every day with a team and give and get feedback on our trades and improve every single day. So the Tim Sykes Challenge is where we do that. And as I mentioned before, the Tim Sykes Challenge is a complete course, educational course, and live trading program that helps you have more success in your trading. And I use that term because I don't want to be hypey and salesy, but it technically is the most successful trading education program that has ever been created. There are more millionaire verified millionaire traders that have come out of the Tim Sykes Challenge than anywhere else. And you've heard their names before. Tim Grattani with over $18 million and Jack Kellogg with over $12 million. Matt Monaco with $2 million. Glenn Peters, 1 point something million dollars. Kyle Williams plus $3 million. Mark Crook plus $3 million. And the list goes on and on and on. And these are all regular people, some of whom were parking cars for a living, working a regular 9-to-5 job. Just regular folks, not necessarily math geniuses. They didn't go, in some cases, they didn't even go to college at all. I'm not saying that trading is easy, but I am saying that it does have a track record of being the number one program. So I host a morning trading webinar inside the Tim Sykes Challenge. And the reason that I'm here today is this is one of the last informational sessions that I'm doing about the Tim Sykes Challenge and the work that I do together with those traders in the challenge. And within the coming days, I'm going to actually shift my focus to completely focusing on helping that group of traders that are already on the inside. And I'm glad that you're here. If you want to get more information about how all of that works and how you can be a part of that morning trading webinar, just click the link that you see in the chat or a button that you see nearby. It should say something like book your call, and you'll get a chance to book a call, set up a time to speak, and we'll just plan your trading future. We'll talk about your goals. We'll talk about the obstacles that are in your way and see if we can do something to help you have the most amount of success possible. Okay, let's keep going. So the strategy behind the Tim Sykes Challenge is to teach you a simple trading method and then trade it live with you in a webinar every day so you improve and learn while potentially making money. And most traders, unfortunately, do this. They look at a large number or infinite number of stocks, and they try to guess which one is going to move, and then they're inevitably disappointed when they pick the wrong stock or the right one at the wrong time. Or they get fixated on a stock like GameStop or Bed Bath & Beyond, and it does well for a little while, and then it just sort of disappears completely and nobody cares about it anymore. And so that's a struggle. What we do inside the challenge is we look at a small number of stocks that already moved, that popped up on a scanning tool, and then we trade that second move up. While the second move is happening, sometimes those stocks halt. And that's why I wanted to bring that subject up. So if you want to do more of this stuff together, if you're enjoying the webinar, go to robbiebooker.com/challenge and set up time for us to speak. I'm not here to be hypey or salesy or try to sell you anything. This is kind of just an information session. And I really want to get to the point in the webinar where we look at some of the stocks that have the most potential to move in the coming weeks. So if you want to do more of this, if you want to trade a simpler way with more success, just let me know. My offer is a free call to strategize about your trading future and introduce you to our program for teaching traders. Now, let's get to work on some longer term charts. So I need to just put together those longer term charts. It'll take me just a brief moment to do that. I'm going to load a 1 hour chart. And we're going to look at NVIDIA first. So if you were kind of excited to come here today and look at stocks that are moving, let's do it. So this is NVIDIA. NVIDIA has built what they refer to as a specialized AI chip. I don't know if that's advertising and marketing or if that's the truth, but I do know that their chip is widely used inside of the servers and computers that are running ChatGPT and other artificial intelligence services. NVIDIA is now at $429 a share. Its market cap is over $1 trillion. It's in a very exclusive club. Can it continue higher? Absolutely. You bet it can. It can do some extraordinary things. And I believe it probably will do some extraordinary things. It's probably going to do some crazy stuff. So I want you to be ready and able to take advantage of those crazy things that it can do. The next profit target on NVIDIA is at $447.81 per share. So if it breaks above $433, let's just say $434, it is likely to continue up to the next profit target at $447. I would be completely willing to buy a call option if you want to trade options with an expiration of the middle of August, so like 60 days to expiration, and a strike price at like 448, 449, or $450, or just outright buy the stock. Now, this stock is expensive, and this stock isn't going to double in price, not in a month or so. So it's the first on the list because it has potential, but it's not necessarily going to be the stock that moves the most and has the potential to make the most money. Let's work our way up from where we are now and take a look at a few other stocks. SOUN, SoundHound, is a website that allows you to mix together, using artificial intelligence, original music. So it takes the styles of music that you say you like, and it then can mix and create original music from those tracks. It's actually extraordinary. I've tried it out. It's a little bit difficult to figure out at first because you almost don't believe that it's really going to happen, and it does work. It's pretty cool. It doesn't mean this company is going to make $1 trillion. It doesn't even mean this company is going to be profitable, but this company is very popular. And rightly so. Right now, artificial intelligence is the word of the day. So what are we going to do about it? We're going to plan a trade. SOUN is a buy trade above $3.50. Remember, we looked at the breakout stuff before. If it can move above $3.50, that's the high that it made on Thursday, May 25th. It can go much higher. It can go to 357 and 371. I'm going to pull together a couple of other ideas on profit targets here. SOUN, yep, a breakout of 350 could go to 377, 411. But these AI stocks, these smaller cap, smaller companies, this could double in price easily. So I'm going to go ahead and say that if it breaks 350, it can easily get to $7. And I'm going to buy this stock if it breaks beyond that level. I'm going to take that trade. Next one is one of my favorites. It's CXAI. Now, why do I like CXAI so much? Because it moved from $1.57 a share, $1.24 a share, to $69 a share within 24 hours. And it can do it again. Now, it's still all the way up in the 11s, and it has the potential to move again. This one on a breakout is a little bit different. It's already started to break out. It's already begun the process of breaking out higher. So where can a trader get in? Levels. Now, it's a more thinly traded company and stock. I like a move above $11.73. Well, I'm doing more trade calls on this webinar than I've ever done in any one of these sessions. So a move above $11.73 could take us to, and you can quote me on this, 12.13. And then I'm going to give you a big picture, much larger profit target. And then another target is as high as $17.37. Now, it went to $69 a share before. It can go to, and it could go to, $100 a share at some point in time. Okay, the next one is AI, and this is the big one. So artificial intelligence is a super cranking sector right now. It's a big deal. And the highest that it's been recently, and I think the all-time high, is at $48.50. There is a chance that it will break above $48.50. And I've said this before, and I've talked about this since it was in the 30s at least. And my friend Paul Scolardi has been talking about this since it was in the 10s. This, if it breaks above $48, I think becomes a $100 stock per share. So a breakout even above $48 even could take us there. If it breaks above $48.50, 49 seems reasonably easy. And then the targets just go out of control from there, at least to $60 from there. And I'm going to take that trade. I've been reluctant to take a lot of trades on this up until now, and I will be willing to take that trade. I'm not going to risk a lot of money. And in all of these trades, remember, past performance is not necessarily indicative of future results. And in every one of these situations, I'm just going to put a 10% stop on these trades. and I don't want to lose more than a couple $100 if things go wrong, and I don't expect to make more than a few $100 up to $1,000 on each of these if they go right. So this isn't sort of a make or break your entire trading career type of situation. All right. So I'll take some questions in the chat right now. All right. So what are these levels that I'm drawing on the chart right here? These are fib retracement levels. And I draw a level from the highest high that it went down to a recent low. And then I wait for a breakout from beyond the levels, and I target the next level and the next level after and the next level after. I do that on short-term charts and long-term charts for day trading and for position trading or longer-term trading. I don't do a lot of swing trading. I don't do a lot of trading where I'm trying to hold on to trades for a long, long time. It's just not my style. I do an okay job of super long-term analysis, and then I do a good job of short-term analysis. It's in that middle ground that I think it's just a little bit more difficult. All right, so watch for that level to break at $48.50. I want to spend some time now talking about the NASDAQ. So the Fed decided and announced that they would pause their interest rate hiking a bit, maybe a lot. And the NASDAQ is now making just extraordinary highs. It's making super giant breakout levels. And where's this going? Well, let's see how far it's gone based on our measurements from before. It's probably on the way up to 371. 377, 381. If they continue to pause those interest rate hikes, that's so bullish for the market. Low interest rates create less expensive borrowing costs. And then traders, like big money traders, hedge funds, will borrow money at low interest rates and just put the money into the stock market. In a lot of cases, that's just what they do. So they'll trade on margin. And those margin rates are lower when interest rates are lower. And if the Fed pauses the interest rate hikes, it makes credit easier to obtain. So you get more home buying, more large purchases, more car buying. And that's interest rates, basically low interest rates are the engine that drives a bull market. And when interest rates are rising, or when the Fed talks about raising interest rates, it's just so damaging to the financial markets. Sometimes it's necessary to reduce inflation, but all right. Do I set a trailing stop? Sometimes I do. Typically, let's say that, let's go back to AI. I'm going to get a much, much bigger profit target set up here. Okay. If we break out above $48.50, next target is $49.69. If it breaks above $49.69, I will move my stop loss to $48.50. If it moves up to $51.57, I will move my stop to $49.69. If it moves up to $54.23, and so on, and so on, and so on. So these are tradingview.com charts. I use these when I do a webinar like this. The lighter background is easier to see, and I have like an infinite ability to expand and contract the candles and the charts to make them easier to see. I use the stocks to trades charts and the trading view charts sort of interchangeably, but when I teach a session like this, these charts seem to make everything a little bit more clear. All right. Thank you so much for being here, my friends. So here's my offer. Once again, I'd like to do a call. Tim Sykes and I joined forces recently, and I brought my morning trading group into the Tim Sykes Challenge. We trade together every single morning. So me and the lifetime members of the Tim Sykes Challenge, we open up a Zoom call. I show my screen. I show my charts. I show the setups. We draw the lines on the charts just like we did here on this session every single day. And then I like to say we trade together. But remember, it's not like there's no requirement or it's not mandatory to actually place a trade. You can just sit there and learn if you want. But if the trades look good to you and you want to take them, we've got a whole group of people that are excited to strategize with you and talk about that. So how do you get on that? How do you get on that morning webinar, and how do you get inside to the challenge? You set up a free call to strategize about your trading future to see if we're a good fit for working together with each other. And you can click the link that's in the chat now, or, and I'm just going to pull that link up here. It's somewhere inside of my stuff. There we go. RobbieBooker.com/challenge, or click the link if it appears on the screen inside of the webinar or a button nearby. You'll be able to see it, and you can set up a time that works for you. So what happens when you set up that call? It's understandably, you're like, okay, well, what is this call again? Like, what's going on? So here's how it works. So if you click on, follow along here with me, and you can click the link, like here's the Friday call. So they've just added a bunch of sessions for Friday, and you can pick like a 10 a.m. call, a 2 p.m. call, and then you fill out your name, your email, your employment status, and it just helps us understand more about your goals, where you are in your trading, where you are in your account, so that we can build a blueprint and a plan for you. Now, there's no, you're going to love the call because it's a chance to finally strategize about your trading future for free without any obligation. You can decide to work together with us. You can decide that it's not. One way or the other, you're going to walk away from that session with a plan. And if you want to join the challenge and come on board, you're going to have some work to do, but then you're also going to have the opportunity to make more money than you've ever made before, and you'll be in the driver's seat. And it's not for everyone. It's only for traders who are particularly excited about getting serious about their trading and focusing on one method and engaging in what I refer to as the feedback loop of trading, where you take a trade, you get some feedback on that trade from a mentor, then you take your next trade based on that feedback, and then you get some more feedback, and then you just get into this constant cycle of feedback and improvement until you've reached some of, or all of, or most of your trading related goals. So it's been a pleasure to be with you. I'm so grateful for the chance that I've had to teach you today, talk about trading halts, and talk about the Tim Sykes Challenge. Remember, I am the host of the Millionaire Challenge podcast. So if you want, the next thing that you can do after you schedule a call is look on Apple Podcasts for the Tim Sykes Millionaire Challenge podcast, or you can also look on Spotify. It's on both of those platforms. I think it's also on anchor.fm, and that's it. There's no other place that it's available, and for right now at least. And there's just 5 episodes in the first season. Doesn't take you very long to get through all of those episodes, and it's just filled with a bunch of information about how we work together, strategies that we trade, and stories of millionaire traders from inside the challenge, what they did, and how to hopefully get some of that same success in your trading. I'll leave the link up there in the chat for just another few minutes, and we'll be signing off, Jerome. And that's great. Eric's got a call. I know Eric's had a call. I know Sarah's had a call. Benny, if you set up a call, that's great. Dallas Tex, hey buddy, how you doing, man? Yeah, CXAI definitely hit 69. That was on a Friday, if you remember, and it happened after hours between Thursday afternoon and Friday. Okay, thanks for being here, everybody. Click that link, and I'll see you on the inside, my friends. Bye for now.